All right, welcome back to Yahoo Finance Live on this Tuesday morning. U.S. stocks, a mixed picture here. We see Bitcoin still trading right around 37,000 as the market continues to digest that rough weekend that we saw a couple of weeks back. So where do things stand in the crypto space as we head towards the second half of 2021? Joining us now for that conversation is Jeffrey Wang. He's the head of Americas at the Amber Group, a crypto finance firm. So Jeff, I'll just start with how you guys are talking about this market with your clients who maybe they've gotten into the space in a big way for the first time in the last 18 months, hadn't seen the kind of up and down cycle that you certainly know is a feature of the crypto markets, and how you guys have, again, talked through the last quarter, which, you know, all in all has been a little flattish for Bitcoin.
Yeah, I mean, I think a lot of the new entrants we've seen in the past 6 months have been kind of on the institutional side, very experienced investors, you know, existing macro funds setting up digital arms. So a lot of these investors are, you know, very familiar with big volatility assets. So for the most part, people who have recently entered are, you know, looking at this with a medium to long-term view, are not really shaken up by it. And in general, actually, they've had more kind of powder to use, and they've been actually buying on dips. So, you know, that was kind of the large motto we've seen from a lot of investors over the past 6 months, saying, you know, I wish I could buy Bitcoin on a dip when we had that rally up to 60,000. And here we have that dip. And actually, we are seeing some of the larger investors, you know, not fazed by it, still buying, kind of averaging in, and generally not that bothered. I think they do have the medium to longer term view. So at this point, you know, I think most investors are either have experienced this before from the retail side or are looking at it from a long term view from the institutional side. So not too many people in that much pain.
Jeffrey, it's Julie here. You are a veteran regular currency, plain old vanilla currency trader.
Yeah.
And you traded other exotics as well. But I'm really curious how this compares to that. You know, are there analytics from FX that you can even apply to Bitcoin and other cryptocurrencies? How do you sort of think about this versus what you did before, or is it really quite different?
Yeah, that's a really good question. I think in general, the Bitcoin and crypto market in a whole is quite similar to traditional assets in the sense that there's a roadmap it's going to follow. So obviously, Bitcoin and crypto in general is much more volatile than foreign exchange, equities. But you know, we're seeing this kind of whole industry develop around it, and the good thing is, crypto can essentially follow the path that's been laid before it. In that sense, what I mean is, we know which products have sold well in foreign exchange and equities in terms of what retail likes to buy, what businesses are needed to support the trading environment, and essentially, you know, crypto can grow much faster because it can really just follow the footsteps of FX and equities, which, you know, took decades to kind of develop and for the market to figure out products, kind of supporting services, and Bitcoin is kind of just following it. Of course, you know, the volatility is much higher, so you have to get used to that. But in general, yeah, the markets kind of function as other kind of financial markets are, and I think crypto as an asset class is kind of has established itself as, you know, viable. So yeah, I think the future is still pretty strong for the industry as a whole.
Jeffrey, what's the next buying signal you're looking at for Bitcoin?
Yeah, that's a tough one. I think hopefully the time of those violent moves that we saw 2 weeks ago, you know, are subdued for now. So, you know, things have bottomed out. Things are relatively calm. And going forward, the market's going to need to be a bit more discerning kind of across the board, meaning, you know, a few months ago, you could have bought any kind of coin across, you know, maybe the top 100 coins, and pretty much they'd all go up and, you know, you wouldn't really have to worry. From here on out, you're going to have to be a bit more discerning, kind of find projects that are adding value where the tokenomics make sense. But in general, on Bitcoin, I think I think if you're a believer for the medium term, you kind of just have to average in, because it's really hard to time. I mean, I bought some lower, I bought some much higher than here. So I think you kind of just need to average in and hold for the medium term.
And, Jeffrey, just thinking about what your clients are trying to accomplish with their crypto allocation, is it a source of alpha? Is it a source of diversification? Is it because something their investors have demanded be part of a portfolio? How are those clients, or how are your clients, I guess, responding to their interest or the way that they're being guided by their own clients into this space?
Yeah, I think it's a bit of both. So for one, let's say you're an institution that has been traditionally in, the macro space. You've kind of seen very low volatility in a lot of your underlyings, and then you look on the digital asset side and you're seeing, potentially huge gains that you're missing out on. And then on the flip side of that, is also that you're seeing your competitors also set up digital arms. So you're kind of missing out on that as well. So there's a bit of peer pressure involved, but I think crypto has kind of backed itself up, and it is a kind of viable asset class. And there are, real opportunities. There's real money to be made. So I guess when a traditional firm that is really just trying to provide performance for their investors, and you see an asset that can have 20% moves. It is volatile and you can have down days, obviously, but if for these kind of traders and professional investors, they're looking at the upside.
Yeah, easier to explain why it's down 20% than why you missed the 300% move on the upside when people come calling about that one. All right, Jeffrey Wang is the head of Americas at the Amber Group. Jeffrey, thanks so much for jumping on this morning. All right, welcome back to Yahoo Finance Live. Last night after the market closed, Zoom out with its latest quarterly results. And as you can see here, a blowout quarter for the company, revenue almost totaling $1 billion in the company's most recent quarter. Adjusted earnings per share beating estimates by 34 cents. And Zoom CFO Kelly Steckelberg joins us now to talk about the latest quarter and the future for the business. So Kelly, let's talk about something that came up quite a bit on the call, which is that mix in terms of customer size. You continue to see smaller customers coming on the platform, but also retaining some big enterprise accounts. I think 2,000 customers, if I have it right, with more than 100,000 in annual billings. What's the mix been like, and how do you expect that to evolve, as we kind of head through the year and the years ahead here?
Yeah, we were really excited about our momentum in Q1. We signed our largest deal to date with a large financial institution. There were also some amazing customers that we talked about on the call yesterday, including Kimberly-Clark, Target, and Denso. So we continue to see momentum in the upmarket. And as you said, we had 1,999 customers with greater than $100,000 of trailing 12-month revenue. So we continue to see strength. And I think, as we all know, there's uncertainty about the future of work, but what we all know is it's not going to be the same as it was before. So as organizations are thinking about how they start to welcome their employees back into the office, they're going to do that in a hybrid approach, and Zoom is a central part of that.
Kelly, in this land of a hybrid work environment, what's a normalized growth rate for a company like Zoom in terms of sales?
So we gave guidance yesterday, which was in the range of $3.75 to $3.99 billion for FY22, and that is in the range of 50% year-over-year growth. So, we had 300%, over 300% growth last year, but at this scale, I think you're starting to see us normalize in a range. We haven't given future guidance beyond FY22, which is the current year that we're in. But we're very proud of our 50% year-over-year growth and expect that to continue to moderate as we look towards FY23.
Kelly, it's Julie here. I think we're starting to get an answer as to what Zoom looks like beyond Zoom, right? Beyond the company's core product with Zoom Rooms, Zoom Phone, where you guys now have, 1.5 million people using that, individuals using that. What does the full suite of services eventually look like from Zoom? What kinds of things are you guys looking to add to further spur growth?
Yeah, so we're really evolving from being the killer app of Zoom meetings that you all know and love into being Zoom, the platform, which will be the communications hub. And thank you. You listed off most of those great products that we have, which Zoom Rooms, which is our conference room solution, Zoom Phone, which is our cloud PBX solution, which is a little over 2 years old. We also have Zoom Events, which is our corporate events platform. And then later this summer, we're going to have Zoom Apps, which will be generally available. And those are apps that are being developed with third parties, amazing companies like ServiceNow, Asana, WW, Thrive, which allow you to have a very immersive and interactive experience in the meeting itself. And so all of this is going to come together along. We also have a chat product, Zoom Chat. And all of that brings together an experience where you can not only communicate in Zoom, but you can also do your work here. And it allows other third-party apps that you love to develop on our platform itself.
Kelly, you acknowledged on the call last night that Zoom's about a year behind in its international strategy. So much focus on the US, and it's been a busy past 12 to 24 months. What is the international strategy this year?
Yeah, so international is a huge opportunity. What we've seen over the last 15 months is an increase in our global brand awareness, as well as an acceleration of video communications adoption. I think that if you looked around the globe on a pre-pandemic basis, the use of video communications outside of the US was lagging behind. And what the pandemic has done is really accelerated that adoption and acceptance. And so specifically what I was talking about last night was our channel strategy, but in general, international is a really key component of our ongoing growth strategy. What the global brand awareness has done is allowed us to start hiring salespeople in markets very quickly. And it really is a key part of our strategy, both from a direct sales execution as well as a channel strategy.
And, Kelly, I want to ask also about the balance sheet. I mean, you guys have almost $5 billion in cash. You got free cash flow of $500 million, just about $500 million in the last quarter. And just as the CFO of a company that has gone from, we're putting everything back into growth, trying to build market share, to having the whole world come to you. How do you guys think about that cash strategically in terms of M&A? Is it a special dividend, or are you happy to have it sit on the balance sheet? How are you thinking about that?
Yeah, so there are certainly areas in our own organization that we continue to focus on investment. That includes R&D. We want to keep hiring great talent around the globe, so we continue to drive innovation. Also investing in sales capacity as well as marketing, as we are continuing to focus on driving top line growth and taking market share. But on the other side of that, we have a great corp dev team that is very active in continuing to watch what's happening in the ecosystem around us and looking for opportunities to deploy that cash. We've done one acquisition to date last year, the Keybase team that joined us, and we continue to watch for further opportunities. And those could come in the aspect of augmenting either our talent or our technology. And we know that there's some great opportunities out there, and we're continuing to work towards that. So hopefully you'll see something later this year.
All right, Kelly Steckelberg, CFO at Zoom. Kelly, thanks so much for joining the program once again. Hope to talk in future quarters.
Thank you.
Well, the NBA is rapidly expanding its footprint globally, announcing the formation of NBA Africa. The new group will oversee the Basketball Africa League, along with the league's other business in the continent. And it's got some big-name investors backing this new venture, including former players Grant Hill, Joakim Noah, Luol Deng, and NBA great Dikembe Mutombo, who joins us today from Kinshasa, Congo. We've also got Victor Williams, NBA Africa CEO. Victor and Dikembe, it's good to talk to both of you. Victor, would love to start with you first, because the NBA has had a headquarters in Johannesburg since 2010. You've been doing a lot of work there. How does NBA Africa and the formation of this new group change the business for the league?
Thanks for the opportunity to be with you today. So the NBA Africa entity allows us to, it's part of our growth plan for the next 10 years in Africa. And what we wanted to do was to continue to build on the foundation that we've laid over the last 10 years to expand the activities of the NBA on the continent, including grassroots basketball, elite talent development, getting closer to our fans, being a catalyst for economic growth and social development, and starting the Basketball Africa League. And with this new entity, we've partnered with third-party investors to help us accelerate that growth. So we've been very pleased to create a vehicle that allows some of the African business leaders and our NBA Africa basketball legends, such as Dikembe, to join with us to invest with us to support the growth of our game on the continent.
Yeah, and Dikembe, I mean, as a player who was born in Africa, I mean, talk to me about now having the ability to invest here, what it means as a player, but also as an investor, and what you hope to see come out of this new effort in Africa.
To me, first, I want to say thank you for having us. For me, it's a dream come true. It's something that I've dreamed about. We have talked about this for a long time, since the creation of the NBA Africa office in 2010. We are very pleased that 2 weeks ago, we did have a chance to play our first game professionally in the continent of Africa, especially in Kigali. Now, as an investor, I can say that I put my money where my mouth say. So I'm very happy with the goal of the game. I think we have a chance to succeed. I don't have no doubt that say that we're not going to succeed in this expanding of the NBA in the continent of Africa. Africa is a young continent, more than 800 million people living in a continent under the age of 24 years old. So we have a chance to go this game before they reach 2 billion people.
And Dikembe, even outside of Africa, you've been a global ambassador for the league for years. The last time we spoke, you were in China. So you have traveled globally, looking at the NBA academies, looking at the talent and the business potential. What sets Africa apart from some of these other markets the NBA has expanded into?
Because the continent is so young, it's so fresh. Africa becoming a place of the new discovery. It's such a youth continent. You have a great potential to grow in anything you're trying to do here. So I think for everyone who's thinking about investing in the world today, the best place for you to come is the continent of Africa. But that growth will not happen if we African people do not invest in ourselves. So what we have to do to build more arena, build more facility where our young people can go and develop and becoming a great basketball player. We cannot sit around and wait for the NBA to come do everything. NBA is not a foundation. NBA is a business, is a league. And those are the messages that we are trying to send to allow business people who are doing work here on the continent to be part of this. NBA cannot do everything by himself. It will bring everything that they can, but Africa have to contribute as well.
Yeah, and Victor, I mean, it was interesting to see J. Cole, one of those names that I think a lot of people here in the U.S. knows, very famous guy, playing in Basketball Africa League out there. I mean, how does it maybe build, or how do you look to build kind of the excitement over there? Are you looking to draw people to play in NBA Africa, or is it all just to be homegrown? I mean, how might that play into the strategy here?
Well, we would like to continue to have the Basketball Africa League be a vehicle for developing homegrown talent from the African continent. And so the way we've designed the BAL, the majority of the players are homegrown. However, in order to continue to provide great examples of higher quality play, we've made provisions for a couple of players on each team to come from outside the Africa continent. And it was under that basis that J. Cole played for the Patriots team from Rwanda. And going forward, we would expect to see that other capable players, professional players, as well as potentially stars who have great basketball ability, would go through the process of being evaluated and chosen by the teams in the Basketball Africa League.
And Victor, finally, to what extent are you going to have involvement from current NBA players too? I know they've taken part in academies and in other parts of the world, but how big of a link are you looking to really create between the players currently in the league and then NBA Africa to really try to build out not just the opportunities, but the brand?
Yes, so we continue to have great support from our African players as well as non-African players in the league. And because NBA Africa will be engaged in a variety of activities, there'll be a lot of opportunity for them to support what we're doing. We're really pleased to have the support of our legends such as Dikembe, but there'll be ample opportunity for our current players to support us as well.
Victor Williams, NBA Africa CEO, as well as NBA legend Dikembe Mutombo. It's good to talk to both of you. Appreciate your time.
Thank you for having us.
Let's talk about tech stocks. Let's talk about momentum and what's been going on in this market. Binky Chadha is joining us now, Chief Global Strategist at Deutsche Bank. Binky, it's great to see you. I want to get into tech stocks, but first, I got to spare a word for the memes, I suppose, this morning. And at your level, because I know you're thinking about all of this at a very high level, sector by sector, but how are you thinking about the meme stocks, if at all? Are you getting questions from clients? Are you thinking about them as an asset class? How is all of this factoring into your work?
Hi, Julie. Good morning, and thanks for having me on. We think basically, and this is not a new view. Basically, we've thought that since the bottom in the equity markets last March, the role of the retail investor more broadly basically has been absolutely key to driving the market, explaining its resilience, explaining elevated vol, because a lot of the participation is basically happening through the options market. But our view has basically been that this is all really about, if you want to call it that, immobility at home, and working from home leads to basically trading from home. This has been happening in the US, but it's also been happening elsewhere across the world. And I think one of the most striking things that you want to keep in mind is that basically the participation of the retail investor in U.S. equities has been, is very, very closely followed, of course, inversely the COVID timeline. So, one of my favorite charts is looking at an Apple Mobility Index, looking at the Apple Mobility Index for the U.S. You invert it and you overlay whatever your favorite measure of retail participation in equities is. I have two, whether you take basically the call volume of small traders or you look at the net open bullish position of small traders. And there is a very striking correlation. So I would argue that the participation is following the script, and the thesis that as markets reopen, retail participation is going to come down. Of course, the very recent sort of spike, is pretty notable, but we tend to think about it as really, a flash in the pan as opposed to a change in the trend.
And there we saw the opening bell on this Thursday morning. We see markets a little bit lower to get today's session underway. Binky, something we talked about a lot on this program a couple of weeks ago, and it has kind of fallen out because of meme stocks and other things, but it is really valuations and what's driving valuations and what has ultimately kept valuations for the overall market at the aggregate level pretty flat over the last several months or so. I'm curious how you guys are thinking about valuations in the context of earnings that continue to get revised higher, but a market that on a historical basis is still not cheap by any means.
No, it's not. And in terms of, equity valuations, I mean, I think, the few points to keep in mind are, number one, they are unambiguously high. There's really no debate there. But I think it's also important to keep in mind, which would be my second point, that valuations typically tend to be high at this stage in the economic cycle. And we remain very much of the view that as far as valuations are concerned, it's very feasible, and indeed it's our baseline view that you will get a soft landing, so to speak, in valuations. Assuming that the inflation risk remains exactly that, a risk, which is not really part of our baseline. And the reason to think that is, there is an issue about, what you think the equity multiple was, given the huge, revisions that we're basically having to earnings. But whatever you thought the multiple was on January 1 of this year, keep in mind that basically earnings have been growing very, very robustly. And I would say year to date are already basically up by about 20%, even if you're using sort of a trailing measure. And the markets are up less than that. So multiples have already come down by about 10%. Now, I would say that they've got, quite a ways to go. But, we continue to expect very robust earnings growth. So, a soft landing in valuations is, number one, very possible. It's our baseline. And this is not really, atypical relative to history where, over and under valuations basically take, on average about 3 years to work themselves out. So as long as growth remains strong and earnings remain strong, valuations will come down.
Binky, this euphoria that we're seeing in these meme stocks, do you think that will eventually spill over into the broader markets and send the markets higher? Because it doesn't look like that's happening right now.
No, I don't think so. I mean, I think that, this is the second sort of, episode, which is getting really a lot of attention. But the first one passed. Yes, we did have a pullback. But I would say, if you look at a measure of retail participation, basically peaked in the third week of January and has been coming down in a noisy manner. And so, yes, there are, upticks as we keep coming down. But, if I look at the current level today, we are talking, retail participation is sort of at the levels of last summer. And so there's no reason to believe that, it should not pass, basically.
Binky, great to see you. Binky Chadha is Chief Global Strategist at Deutsche Bank. Be well.
All right, well, certainly the chip shortage has been one of the top stories this year in the world of business, and a story that we expect will continue. A company sitting right at the center of that fascinating business dynamic is Micron. And joining us now to discuss where things stand for the company and the sector at large is David Zinsner. He is the Chief Financial Officer over at Micron. So, David, thanks so much for jumping on this morning. I'd love you to start with, kind of from your vantage point, first week of June 2021, where you see the cycle at as we are trying to get supply to where it needs to go. Certainly demand remains strong on a multi-year time frame, but how does Micron see the landscape today?
Well, first of all, thanks for having me. And as you point out, things have been very strong. We're just wrapping up our third fiscal quarter. We'll finish that off tomorrow, actually. And demand strong across virtually every market: mobile, automotive, computing, cloud. And we've really seen improved pricing, both in our DRAM, our memory business, and in NAND, our storage business. We've also seen good demand on the DRAM front. I think we're in a good place. Last week, Sanjay, our CEO, mentioned that we thought we would hit at least the high end of our range, if not higher. We said that we would be somewhere between $6.9 and $7.3 billion. So at least at the high end, 7.3, if not a little higher. And also because pricing is better, we expect to see very strong gross margins, very strong earnings per share.
David, really interesting here. I know there were a few questions after your earnings about the pricing power. So can you talk to me a little bit more about that, about what you're hearing from customers and about the sustainability of those pricing increases and visibility as you head throughout the year?
Yeah, that's a good question. So, given demand strength, and we expect that demand strength to continue through this year and into next year, I think that the industry in general, particularly on the DRAM front, maybe not so much on the NAND front, but perhaps getting a bit better. On the supply side, those have been more aligned with the demand. That generally is a positive for pricing, and so we've seen pricing improve in DRAM pretty meaningfully. We had seen NAND pricing stabilize when we talked last quarter at the earnings. I think more recently we've actually seen that pricing improve. I think the year looks to be like a really solid year for us, given the demands and supply dynamics, and I think that continues, particularly in DRAM, into next year. As I said, NAND is a little bit more opaque for us, given that there are more suppliers in the industry. It's harder to delineate exactly what all the suppliers are going to do in terms of their supply. But we're cautiously optimistic on the NAND front and definitely optimistic on the DRAM front.
So David, demand is strong. That's good. But is it nearing a peak?
I don't think so. I mean, I think you guys mentioned before that this is a multi-year cycle or secular cycle we're under. Really, there's computerization going on across pretty much every end application, and memory really is at the heart of that. Memory tends to be the bottleneck in a lot of those applications, so it requires more content going into all these applications to drive the compute that's needed in the mobile space for 5G and cloud, in particular for artificial intelligence, in automotive for more advanced automotive infotainment and autonomous driving. So I think those things are long-term secular drivers that will last for a long time. There might be perturbations over time. This is a cyclical industry, but I think when you look at this over a 5-10 year horizon, things look very good for the semiconductor space, look very, very good for the memory space.
There's a bit of a shift going on amongst your customers in terms of how they order, from just in time to the way the street puts it, just in case. How is that changing your business?
So first of all, I think we are doing the same. We want to make sure that we aren't left with an inability to supply to our customers for non-memory components outside of what we manufacture. And so, we are carrying what we call buffer levels of inventory across our supply chain to make sure that doesn't cause an issue. And I really think, as you look across the supply chain, the electronic science supply chain, almost every person in my seat, the CFO, is thinking the same way. We need to make sure that we have enough inventory to make sure we meet what customers are asking for. And a lot of these parts are generally not very expensive relative to the bill of materials for the customer. And so, it would be, disappointing for every one of these customers if they can't, meet customer demand based on, one single relatively inexpensive part. So I do agree that, most of the industry will move to this model where they'll carry higher levels of buffer inventory across a number of different components and carry higher levels of inventory in general to make sure that, the demand is met.
And Dave, about 30 to 35% of your sales are tied to the mobile phone market. Is the 5G cycle living up to the hype?
It is, actually. I mean, quite honestly, I've been surprised about it. There were over 250 million 5G handsets sold last year, calendar 20. We'd expect that to double this year. That's still not a majority of the handsets that get sold. So, there's over 1 billion handsets sold every year. So it's increasing at a fairly rapid pace. Still a lot more room to go for that to really be the workhorse, main device getting sold today. And the good thing for us is, in the mobile space, it's basically double the content in 5G versus 4G for us. So not only do we get this, pickup in 5G handsets, just the end demand improving, we also get the content increases from this transition from 4G to 5G.
And David, finally, before we let you go, I did want to ask about this this recent credit facility you guys stood up for sustainable investments. I'm just curious, as a CFO of a company, we hear a lot about ESG and sustainability targets, but as a CFO, thinking about the capital structure, of the business. This seems to me like something I haven't seen before. Maybe your peers are standing these kinds of things up, but I'm curious if you could just quickly talk us through sort of how this came about and how you will draw on this credit line.
Yeah, actually, it's somewhat common in, or at least more common in Europe, but we're one of the first to do it in the U.S. I'm pretty excited about it. We have a focus on ESG. We're going to spend $1 billion over the next 5 to 7 years in terms of improving, our impact on the environment. The credit facility, you see a lot of these green bonds that are utilized for improvement of on the ESG front, but not so much on the credit facility side. So we went to our banks and investigated whether we could put a facility in place that really not only benefited us, but incentivized us to hit our objectives from an ESG orientation. And so if we hit all, and we have to hit them every year, there's improving milestones every year over the life of the 5-year facility. But every year, if we hit those, we get about $1 million of interest expense savings. Credit Agricole is the agent of the overall facility. So they, in terms of on the sustainability front, so they monitor how we're doing and make sure we comply with it. The $1 million savings is good, but what I really like about it is it just kind of reinforces the commitment that we have towards significantly improving our impact on the environment. We have very aggressive goals for 2030. And over this 5-year period where the facility's in place, this will be, opportunities to move the ball forward in terms of improving ESG.
All right. David Zinsner is the CFO at Micron. David, really appreciate you taking some time to talk with us this morning, and I hope we'll stay in touch.
Thanks for having me. Appreciate it.
Welcome back to Yahoo Finance Live. I'm Julia LaRoche. Take a look at shares of JM Smucker and Company after the consumer packaged goods company reported fourth quarter earnings for the quarter ended in April. Shares are up more than 2% after those results. We're joined now by JM Smucker Company's CEO, Mark Smucker. Mark, great to have you back on. Shares are up here. It looks like analysts for that fiscal 2022 guidance, it came in above the consensus. That seems to be where we're seeing a bit of the optimism. So what are the macro themes that are kind of underpinning your outlook in the year ahead?
Yeah, thanks for having me, Julia. The first thing is I would just start with is what we have done over the last year to ensure that we come out of this pandemic a much stronger company. And those are things like becoming a leaner and more agile organization, building the correct, right, focused commercial capabilities around our customers, our retail customers and our consumers, and then just being very disciplined about prioritizing which growth initiatives and brands get the resources. So we've done that. And then, of course, our industry has benefited from the tailwinds of people working from home, of a significantly larger number of households with pets. And those tailwinds are continuing into our new fiscal year. People are going to continue working from home. We are not going back to the previous normal. There is a new normal that we are working through right now. And those tailwinds, as well as what we've done ourselves internally, are going to continue to benefit our business.
So you mentioned kind of the big one, the work from home. I was going to ask you what happens when folks start to, go back to school, for example, when the kids go back to school. How do you kind of think about maybe the impact to your business as it relates to the back to school movement?
Well, actually, we have one of our largest growth brands, our Smucker's Uncrustables peanut butter and jelly sandwiches. And that product actually began in its inception 20 years ago, began in schools. So obviously schools are a big customer of ours, but more broadly as adults, and particularly those of us who are in the workforce, are likely not going back to the same amount of time they spent in the office before. And so because folks are going to be working at least part of the time from home, And we are in categories, particularly in breakfast and lunch occasions. We view that those tailwinds are going to continue to help our business.
Yeah, I heard you say on the call that the Uncrustables did 130 million in net sales in the quarter, and that you all expect, I think, 500 million for fiscal 2023. So certainly some momentum there. I think a big theme we should talk about, Mark, is inflation. That's kind of been the story of late. And of course, you being a consumer packaged goods company with sourcing raw materials, what are you seeing out there as it relates to inflation, and how are you mitigating that risk?
Sure. So inflation is something that we deal with, of course, all the time. Because we're in the food business, most of our products are largely based on commodity prices, packaging, and so forth. We've seen this inflation coming. It really started back in April of 2020. And so as those things go, we have an obligation to address that. We're going to do that in a prudent fashion. We're going to do that working with our retail customers to make sure that we can pass along those cost increases, which ultimately will impact the consumer. But again, doing that in a measured and responsible way as much as we possibly can.
I know, yeah, you all had to do that with your peanut butter products, I think back in the fall, if I recall. I think you gave an investor presentation talk about it. Can we talk about what it might mean for the consumer? I would love to kind of explore that a bit further.
Well, sure. We actually are taking price action across broadly our entire portfolio. Most of those pricing actions will come into effect in July. Consumers will likely see them on shelf sometime in the early to mid-fall timeframe. But again, we want to make sure that we're taking a responsible approach, working with our retail customers to ensure that we're passing on the right and fair increases down the chain.
Mm-hmm. And so earlier in this conversation, you were talking about kind of the brands where you want to be. I know you all have been repositioning the portfolio over the last year plus, the latest divestiture, of course, of the shortenings and the oils. Before that, it was getting out of the baking mixes. Where do you want to be, and where do you see the opportunities for growth going forward?
Well, first of all, we love the three categories that we're in, essentially coffee, pet, and then more broadly snacking, going back to the Uncrustables comment. They're all great growing categories, and the brands in which we participate are, generally speaking, leading brands. So we will continue to lead in those categories. We will continue to reshape our portfolio and ensuring that the brands within the categories we participate are ones that can grow. So our decision to exit the baking category with the most recent Crisco divestiture, just understanding that brand is not going to be a growth engine. Similarly, Natural Balance premium pet food, which we also divested this past year, also not going to be a growth driver. So ensuring that our portfolio is refined and consists of brands that we have confidence in the growth potential of those.
Mark Smucker is the CEO of J.M. Smucker Company. Mark, thank you again for your time, and look forward to having you back on in the near future.
It's been a very interesting time for the Bitcoin community, I think, and that's what I'm hearing around the conference is kind of Elon tweeting again, sending some price jitters through the market. I mean, you've been going back and forth with him about this. The sustainability question's still there. What's your take right now on how important that is to where we go on the price level here?
I appreciate Elon Musk. Elon continues to tweet. The price of Bitcoin continues to stay lower than it probably should, which gives all of the plebes the opportunity to buy up cheap Bitcoin. So thank you, Elon. I really appreciate it. Besides the price conversation, I think that what ends up happening is people are just misinformed when it comes to the energy consumption. There's two main misconceptions. One is the energy mix. I think that's kind of getting sorted out. People are explaining it. Folks like Nick Carter doing a great job kind of writing about that energy mix and how it's evolving over time. But two also is there's this belief that similar to the legacy financial system, it's not a linear energy consumption story. So you don't need more energy consumption to serve more users or more transactions. It's actually a system where whether there's full blocks or not full blocks, the energy consumption is actually pretty similar. And then you can also put millions and millions of transactions into a single block. And so I think that just as people learn more about the system, this will kind of just be a blip in the radar. People will forget about it. And 5 or 10 years from now, we'll laugh and be like, remember when no one understood this and they were all talking about the energy consumption?
Yeah, and the other thing too, I mean, we're at a Bitcoin conference, so it's kind of frowned upon to be talking about other projects out there. But what I've been watching is Bitcoin dominance, kind of the measure of Bitcoin's market cap relative to the rest of crypto. And that's down, I think last I checked, around like 43%, which is down significantly from the beginning of the year, which people might point out, maybe that means more money is flowing into some of these other projects out there. What do you get in terms of the sense right now, maybe specifically to institutional investors too, big money, where they're looking at relative to where Bitcoin was in the last big bull market?
Yeah, I think it's a complete mistake to look at Bitcoin dominance and to look at any comparison of Bitcoin to everything else, right? Bitcoin is going after a currency. It wants to be a global store of value and a medium of exchange. It is the winner there, right? And for a cryptocurrency, an actual decentralized currency, it has 100% market dominance. That's important because Bitcoin specifically is going after decentralization. That is what it holds above everything else. It holds it over transaction speeds, cost of fees, all that kind of stuff. Decentralization is most important. Everything else is competing on throughput, fees, etc. And you're getting a lot of technical innovation, a lot of technical competition. But I think that's where there's a lot of questions still as to who the winner is and all those other smart contract platforms, et cetera.
Yep.
But Bitcoin is 100% dominance when it comes to a decentralized currency, and that's what makes it so special. And I think that's why you're seeing, tens of thousands of people show up here at this conference saying, like, this has won already. And I think it's just inevitable at this point, and the real question is just how long does it take to get global adoption?
Yeah, and we're seeing that adoption too when it comes to that debate. But when it comes to the next major catalyst, because we were talking about institutions coming in, there's that. We were talking about kind of it being used for transactions. So you can look at Tesla kind of accepting as a form of payment before they went back on that. But I mean, what is the next big thing there that will drive Bitcoin higher? Because it seems like transactions or even the institutional adoption hasn't done much at the levels we're at right now. So what do you see as maybe the next most overlooked catalyst here?
We started with retail. We then moved in and we started to get financial institutions. Then we got corporations. There's one group of people left and they're coming. It's the countries and the central banks. And I think people think that's a 5 or 10 year type conversation. I think that's a 2021 conversation. And so I think this year we'll see a country or a central bank come out and go ahead and say, look, we've decided to go either purchase it, put it in our reserves, et cetera. You saw yesterday Russia decided to drop the dollar out of that National Wellbeing Fund. They didn't buy Bitcoin as far as we know, but they decided to increase their exposure to other currencies, also buy some gold. And so I think countries are just thinking about this, right? What should I be doing if all of a sudden the United States dollar has either some sort of censorship risk or it's got some sort of macroeconomic and debasement risk. And so I think that naturally Bitcoin will end up in one of the countries. I don't know which one yet, but I do think that it'll end up happening in 2021.
Yeah, as you watch out kind of the China risks we always see through kind of triggering some of the sell-offs, I mean, when you watch that play out and kind of the way that they've been taking a position maybe against similar sustainability in question when it comes to mining, seems to be a benefit, right? We talk so much about people here in the U.S. who are stressing that as a national security concern. Seemed like it would be a reason to be bullish, even more bullish on Bitcoin. I mean, how do you see that playing out when it comes to the U.S. versus China on that front?
It's no secret. I lost 30% of my net worth in the last month. I'm more bullish today than I've ever been. And the reason is because what we're seeing is the fundamentals are continuing to gain strength. More people are adopting this currency. You're seeing more wallet addresses. You're seeing more transactions. You're seeing just the belief of this as a global store of value continue to take seat. But what you're also seeing is this kind of geopolitical conversation play out where literally China's pushing hash rate outside of their country. It's pushing it to a more green grade. It's pushing it to kind of a more decentralized aspect. Yep. And so I just generally think like when you look at the underlying fundamentals, forget price, Bitcoin has never been kind of stronger than it is today, and I don't think that people are really accounting for the fundamentals. They're all just looking at price, looking at tweets, and they're getting caught up in the emotional sentiment. But if you can ignore that stuff and you look at the fundamentals, it's really, really hard to be bearish on Bitcoin right now.
Yeah, I mean, and yet there still are. There are people who are bearish on Bitcoin, and
Bitcoin's an intelligence test. If you're still bearish, that you can figure out which side of the test you end up on.
That is what we're hearing down here at the conference. But when it comes to maybe the risks that you do pay attention to, right? Because there are those out there, and Gary Gensler's getting set up at the SEC. There are things that maybe some people in the crypto world fear. I mean, is there one that keeps you up at night that you're watching now?
I think there's two main areas that I really spend a lot of time on. One is a self-imposed wound, right? So there can still be a bug that would be introduced in the development process. I think the probability is near zero, very methodical process, kind of very, very intentional process, but still that it could be a potential issue. And so we just have to be vigilant and kind of continue to watch that. Yep. And then the second is not any sort of banning or anything like that. It's actually more regulation and taxes, right? And so what we need to do is we need to continue to educate politicians, regulators, rule makers, make sure they understand this asset. And it's really exciting to see there's multiple congressmen or senators or politicians that are here at the conference. We literally have them with laser eyes on Twitter. Like it is working, but we have to remain dedicated to that effort, because the more educated they are, the better decisions they'll make. The better decisions they make, the less of a risk that becomes.
Well, I know you got to run. You're off to your panel with the Winklevoss twins coming up here at Miami, but Pompliano, the man they call Pomp, Anthony Pompliano, one of my favorite people in the crypto world. Appreciate you stopping by here to chat.
Absolutely. Thanks so
much.
much.
Out there. Be well. Julia, we'll send it back to you here from Miami.